Thank you for joining us. My name is Terry Castellano. I'm a Senior Vice President and Private Client Relationship Manager at First National Bank of South Miami. As part of our ongoing webinar series, today's topic will be selling your business in a COVID environment. I'll be joined today by estate planning attorney Steve Silverman and a colleague of mine here at First National, Gustavo Martello. Gustavo is a certified financial planner and part of our private client services team. Why are we doing this webinar? Well, the majority of our clients, First National Bank clients, are business owners, they're entrepreneurs, and many of them are in a situation where they're addressing, do they want to continue? This pandemic has created a great deal of challenges for business owners, for small business owners, and some are considering if they want to embark upon rebuilding or dealing with the new normal. And for that reason, we wanted to bring together some experts and discuss the viability of selling, what some of the implications are, and if it makes sense, so that our clients can make an informed decision. We know that providing local experts in this type of forum has been well received, and we are all about providing solutions and that high level of responsiveness. And for that reason, it made sense. When we started looking at some of the research and data surrounding small business owners, what we found was, and let's move on to the next slide, what we found.
As Terry indicated, the average business owner is 65 years old. We wanted to share a simple visual where people can relate with respect to growing your business over time and starting to consider your exit options at the peak of its value. Generally, this is close to age 65. Financial planning for business owners is so important because there are critical decisions made between the ages of 60 and 72. Social Security claiming strategies, Medicare health insurance coverage, and tax coordination with your retirement accounts are three of the bigger decisions along with the sale of your business. Before I hand this off to Steven, where he covers the first step to consider in selling your business and the people you should consider consulting with, we wanted to bring you a little sneak preview of what could be your view after you execute the sale of your business and live out your needs, wants, and wishes with the people who are most important to you. So let's all take a deep breath, soak it all in, and Steven, take it away.
Thanks, Gustavo. That's one spectacular view. Whether you're looking to retire to an island, a mountain home, or remain just where you are, here are a few steps to help you focus your thoughts on this decision. The first is, who's on your team? We have your family first because they're part of your team, and people don't often think about that. But for you to have a success in selling your business and moving to a different part of your life, you need to have your family on board with your decisions. You need to talk it out with them. Your banker, because your banker has experience in dealing with sales of businesses and purchases of them, and can help you, guide you through this situation. In addition, the banker knows your local environment and economy and give you suggestions and guidance as to how to deal with that. Your attorney will help you structure the deal and make sure to look out for you and protect you from things in your agreement or for risks that you might have to encounter when you sell your business. Your CPA or tax professional will be able to help you in determining the tax impacts of the sale of your business, your various options, and then also to help you look at your existing financial situation and determine the impact on that based on your sale of your business. Valuation. If you were closed or shuttered any of the 5 months that this has been going on or operating at half capacity in the future, this will affect your valuation in many ways. How do you put a value on that going forward? How does that impact your valuation going forward? If you have additional costs that are going to be ongoing now for forever or for the foreseeable future, how does that impact your financials? Do you need to account for those, such as one-time costs, in your financial statements to show that they were one-time costs and not affect your overall profitability? Maybe the valuation that you had in mind in December of 2019 at the year end is different than it is now. Do you want to accept less money now for your business if it's cash versus possibly getting more if in the future waiting for the sale or taking your money over time, but there's additional risk if you stagger the payments out? Who will buy your business? There are three main categories: family members, a partner or longtime employee, or a business broker or a third party. Family members are sometimes easiest sales and sometimes the most difficult. It's not just the pure numbers, there's emotion involved. Mom may differ from dad as to how the business is to be sold, who gets the fair price. There are many issues when you have family members, but there are also many opportunities. You get an opportunity to train someone in how you want the business to be run and also hopefully enable them to succeed and carry the business for the family forward. Family members are a unique opportunity, but also a lot of challenges. Your partner or longtime employee. This is another very common circumstance. Do you have a business partner who would like to buy you out? Do you have a longtime employee who's been working for you and with the right opportunity could take this business and grow it? Finally, if there's no one either from your family or as a longtime employee or partner, you can go to an outsider. There are business brokers or just a third party, possibly competitor, someone who's looking to invest in a business. There are many opportunities out there, and right now in a changing environment, many people are looking for new opportunities for new businesses to take over and transition and grow.
So let's say you found a buyer. Is it safe health-wise to sell your business now? Is your business conducive to 6 feet of social distancing seating, for example? So if you're a restaurant, would a buyer take on the added risk? Is your business deemed essential? This would absolutely be a positive in this environment. Common examples would be healthcare providers, gas stations, anything automotive, grocery stores, and pharmacies, to name a few. Will your business recover from this, or is it a fatal blow? Does the new normal alter your ability to deliver goods and services as you have historically, or are there alterations that can be made so you can continue to run your business effectively and profitably?
How are you going to structure the transaction? There are mainly two ways that most business sales are structured. One is a sale of the assets themselves, and the other is the sale of the entity. When we say the sale of the entity, usually this involves what's called a limited liability company or a corporation. And the corporation or the LLC actually own the assets that are being sold, and those assets are included as part of the purchase of the entity. A main difference in the two is if someone purchases the entity, they assume all the obligations and responsibilities of that entity as well as its assets. The other way of selling a business is the sale of the actual asset. So if a vehicle is owned and that is one of the assets, the vehicle is transferred from the name of the owner to the new buyer. Buildings, other things like that are physically transferred their ownership as opposed to just purchasing the actual entity itself. The second issue is how are the proceeds going to be paid? Is the purchase price going to be paid in a lump sum cash payment? Will it be paid out over a period of time? In addition, will it be a possibility of a percentage of future income as part of the deal? There are many different issues and ways that are involved here. If you're selling to a family member, part of the sales price might involve gifting of assets either immediately or over a period of time. Negotiating the sale. In the future, there's going to be a significant increase in the due diligence that occurs in any sale of a business. The buyer is going to want to closely inspect the financial records to determine what impact, if any, has occurred on the business due to the virus. There'll also be long-term implications, and they will want to see the books and records to make sure that the business is viable or will be successful in the future. There will be an increase in the use of indemnifications and warranties. The buyer will want certain indemnifications if there's an entity purchase as to any litigation that might occur or unexpected losses that should have been disclosed. And there'll be warranties as to financial positions that may be evaluated as part of the sale negotiation. The business's existing leases, the landlord will be even closer examined. Was there an issue of deferred rent that may be coming up in the future that will affect the purchase price? Is there an opportunity to cancel the lease and possibly reduce overhead from the business in the future? Many issues will occur with the future landlord rent issues. Another issue will be whether or not the seller either retains or sells potential insurance claims or potential claims from other areas to recover as a result of the virus. The loans that might have been taken out by the business and other things will be evaluated as part of this. Obviously, the purchase price is important, but also the cash up front. Will there be more money paid later if the sale is held up? Will there be potential increase incentives on deals in the future as part of the sale? All the cash up front versus future money is an issue that will be negotiated. Obviously, the issue of self-financing as part of the sale is something you will have to consider, and now you have to evaluate whether the potential buyer is going to be successful in the sale as opposed to getting all cash and walking away. Oftentimes in a small business, the seller will be asked to stay on in the business, whether for a consulting period of a month or as long as a year, or may be asked to stay active in the business, whether on a full-time or a part-time basis. These are additional negotiation issues that need to be covered and clarified as to what the expectations of both parties would be as to future involvement of the seller in the business. Possibly the most important thing to be aware of is there's no such thing as verbal promises that are enforceable. If it's not in writing, as a practical matter, you need to assume that it didn't happen. Too many disputes occur because people promise stuff verbally and their contracts specify that only written promises and provisions are enforceable. You must have it in writing to protect yourself. Why this is the best opportunity and time to review your current estate plan. We've all been at home a lot more than we ever did before, and we've had opportunities to think. We also are reevaluating what is really important to us. It's not just a matter of money, it's a matter of personal values and concerns and values. As part of that, people are reevaluating their estate plan. Do they want to give perhaps more money to charitable organizations? Do they want to change who they've provided for as beneficiaries? Cutting out some people perhaps, adding other ones, increasing or decreasing what they leave to someone. These are different things that we didn't think about as much before. Now is an opportunity for us to really decide what's important to us and make our estate plan or our legacy planning based on that.
And lastly, although it shouldn't be the last step in the process, we're going to cover financial planning. Just like you plan financially for your business, a personal financial plan is equally as important. This is a collaborative process that helps maximize your potential to reach life goals through advice that integrates your family dynamics and financial situation. A holistic financial plan covers your family status, net worth, income level, life stage, and other circumstances. A plan can help you take a peek into the future and forecast your cash flow from a lump sum sale of your business or an installment sale over a period of time. What's the optimal risk return for your situation? How much risk do you really need to take in order to ensure that you reach your goals and not outlive your money? Ongoing monitoring. Your plan should be a living, breathing instrument. We all know that life changes, the markets change, your family situation changes. Your plan should be nimble enough to evolve with your situation. We hope the information on this webinar was useful and encourage you to reach out to any of us if you're thinking of selling your business or have any questions. At First National Bank of South Miami, we truly strive to bring you local professionals you can trust. Thanks for tuning in.